Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. There's a variety of real estate to pick from when you're looking to invest. Imagine a property with no deferred maintenance, high tenant desirability, a builder's home warranty, and lower insurance premiums. Today, we're going to talk about real estate that is built specifically for rent. And we've got a couple of great guests on the Real Estate Guys radio program.
Are you an accredited investor looking for reliable cash flow with some additional upside? You probably realize that energy drives all economic activity. The COVID-19 global slowdown created a temporary crash in oil prices, which in turn opened up a tremendous but little-known opportunity. This unique situation has allowed a seasoned team of oil professionals to craft a compelling structure that locks in profit when oil prices are low, while capturing significant upside when prices increase. And this offering leverages proven oil production, not risky exploration. Sound intriguing? Then your first investment should be the 20 minutes it takes to watch a short video that will detail this high-yield passive income opportunity. Simply send your email request to blueridge@realestateguysradio.com. If you're an accredited investor looking for predictable yield with sizable upside, email blueridge@realestateguysradio.com. That's blueridge@realestateguysradio.com.
Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. Joining me, as usual, it's our co-host and financial strategist, Russell Gray.
Hey, Robert.
You know, you can buy a property to rent out, and that makes a ton of sense. And it can be a property that used to be a single-family home to live in. It can be an apartment building. It can be a retail space. Today, we're going to talk about kind of a unique niche within a niche, and that is build-to-rent, properties that were designed and built for tenants to be owned by folks just like you. And this is a really unique area we've been watching for a long time. And today we're going to really, I think, provide some insight and some resources for you to consider.
Yeah, I think there's a lot of reasons why this makes sense. Obviously, we've been talking about it for the last couple of years because when prices get to a certain point, when demand gets to a certain point, and when there's changes in human behavior, what people want and how they live their lives, it means that the real estate, the physical structures that they occupy, and sometimes the markets that they occupy them in, need to adapt and need to change. Well, it's hard to do when stuff's been built 20, 30, 40 years ago. Now, the other part is it's hard to go build replacement stuff when you're competing with the costs from yesterday. But when that inventory is all sold and you have to add new inventory, it's only going to be new. Then the competition isn't the old inventory. It's the new inventory that's being engineered for a higher end homeowner. And the problem as a real estate investor is how do you buy that and have that make sense from a cash flow perspective? Of course, the answer is to engineer it looking at both sides of the equation. Number one, you engineer it from the tenant's perspective, giving them what they are looking for in today's world. And you engineer it from a value perspective for a landlord, what they're looking for to have it make financial sense, both at the acquisition and the maintenance. When you put those things two together in today's world with low interest rates, you have a niche in the real estate world that is really hot right now, and people need to be paying attention to it.
Well, I think it's a great point if you think about the way that markets cycle and change. So there's been a couple of periods in our investment career, which may be longer than yours, where we could actually go out and pretty consistently buy property below replacement cost, meaning what it would cost a developer to buy land and build and use all the construction materials and hire the labor and have some semblance of profit. You could buy cheaper than that. And last time around, there were some real bargains to be had, and yet that is not usually how it is. If you're going to buy something below replacement cost, it's going to be something built in the 50s or 60s, and it might be functionally obsolete. Today, we're at a place where we see a lot of the markets, real estate markets, driven higher in residential. And when that happens, all of a sudden, there's this competition. And we know that we are going to need more housing in certain areas. And for a builder or developer to build really depends on the demand. So a typical builder might build single family homes for people to live in. And then they're concerned about who's moving into the area, what can they afford, what kind of features do they want in a home, what are the latest and greatest ideas in home construction and design. But this is different. This is looking instead for where there's demand from a tenant base and then making sure that the economics work. So to your point, Russ, you kind of have to backwards engineer this. And the folks who are building this kind of product today have to pay real attention to what's happening in the rental market. What is the durability of rent? Where's the demand coming from? We've just been through a few months of lots of people getting laid off from work, certain industries being hit harder than others. And yet, in a lot of places, there is more demand than there is supply, which means there's opportunity.
Yeah, and that's what you're looking for. You're looking for these shifts, these trends. We look at them all the time. Clearly, people have discovered they can work at home. Businesses have discovered they can lead teams at home, which means that all of a sudden these commute times, they don't mean as much. School districts still mean something. And then again, a lot of kids are going to school at home too. So
Right.
I don't think that that's a permanent trend, but it's affecting the way people are building their lives. The other thing is they're concerned about the virus. Let's face it, some people just don't want to be on top of each other. So, you talk about social distancing, you can talk about residential distancing. I don't want a shared common wall. I don't want to have to share a stairway or an aisleway or something. I want to kind of have my own space. I want to have my own lot. I want to be where I want to be. So you have some of that going on. So the opportunity to find more affordable markets because you don't need to commute and be near urban centers or expensive places. The fact that you don't want to be on top of each other and you're living more of things you did outside of your life at home. Like it's one thing to live at home. It's another thing to work at home. It's one thing to live at home. It's another thing to work at home and work out at home. And then you add schooling or whatever else to that. All of a sudden your space becomes, you need more space. Now you're not competing with somebody who's moving from like a McMansion. You're talking to people that have been living in apartments. And where are they going to go? So the big opportunity is the opportunity to engineer it for both sides in a marketplace where the pricing will allow you to build it with interest rates that will allow it to make sense for an investor. When you put all that together, to be able to buy brand new property, pick up the tax breaks, not have to worry about deferred maintenance, give tenants what they want where the demand is, where they're willing to pay a premium, and then you're able to finance that affordably and get a price that's reasonable because they've engineered out some of the costs. That is a great, great mixture.
As buy and hold real estate investors, we are getting married to a market, and typically a property. If you buy a property and decide you want to liquidate it in 3 or 4 years, you probably haven't gained much ground because of sales costs and vacancy and the cost to fix up the unit and all those kinds of things. So it is a long-term thing. So I don't want people to get the idea that, hey, this is the latest, greatest phase, and because COVID's been around for a few months, let's all change our investment philosophy. No, that's not the point. The point is there are reasons why today tenants are favoring single-family homes over larger apartments. Doesn't mean that you don't want to buy apartment buildings. It just means that is happening. People don't want to touch the same elevator buttons and have to see as many people in the lobby or the parking lot. That's just a reality. But I think even more important is there's 2 categories of buyer, if you will, for build to rent. There's the big boys and girls who are out there and creating neighborhoods of rental homes, and that's very different than what you and I might invest in, which are brand new properties that appeal to tenants and make a lot of sense. So Russ, you mentioned some of the reasons. You've got a brand new property, and that's great because there's no deferred maintenance, but there's some other reasons it's great. The age life methodology of appraisal tells us that at some point homes wear out. They're no longer viable. If I buy a home that's 40 years old, it's still got some life left in it, but not as much as a brand new house. The next thing is that when a house is new, it typically comes with some sort of builder warranty. And in general, even without the warranty, deferred maintenance is at a very minimum amount when the property's new. So you have longer asset life. One of the things we've learned from our friend Gene Gillen is in Florida, where we've seen some great build-to-rent opportunities, the insurance premiums are way less on new homes. And that's because they're built with the weather in mind, if you will. So that's a geographic specific example, but it's pretty interesting and it's something you'd want to pay attention to. So I think in general, this idea of finding a property that works and all things being equal, the neighborhood works, the rental range works, the area in terms of demand, and then it happens to be a brand new house, which by the way is not only engineered from a financial perspective, that's actually generally engineered also from a durability and usability perspective, because many times these builders are building with what we'll call tenant-resistant finishes.
Exactly. And that goes back to that, cost of maintaining, cost of operating, reducing turnover, tenants that are living in something new and in nicer neighborhoods and attracting better tenants. You have the potential for longer tenancy. So there's a lot of financial reasons. But, the thing that I think is interesting about what we're going to do in today's show is we can understand all this stuff conceptually. It can all make sense logically. You can look at the news and look at the macro picture. But at some point, you really got to dig into the data, and not only dig into the data, but get your thumb on the pulse of what's going on. The problem is, as a mom and pop investor, that costs a lot of money. You're either going to have to pay somebody for that data, which is probably the better way to do it, or you're going to have to try to go gather it yourself, or you're going to be pulling it from somebody that has a sales agenda. But because we're us and we have relationships with people, there are people out there who provide all of this data for builders who are going to make big capital investments on the build side and big investors. And we as little mom and pop investors can kind of go along for the ride if we could just get into a conversation with those folks. So we thought it would be a good idea to reach out to some people who make their living crunching the numbers and doing the data and looking at the surveys and pick their brains. And that's what we're going to do today.
Back in 2003, I first stumbled across John Burns. He's a housing consultant, and he works to help builders and developers figure out markets, what makes sense to build, pricing, all that kind of stuff. And his firm has grown over the years. We had a chance to have John on the program a few years back. And today, they not only publish a lot of great information, but do a lot of specific studies. And so when we come back, you'll meet John Burns and one of his awesome associates as we talk about build to rent today on the Real Estate Guys radio program.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
Hey, it's Robert Helms. Thanks so much for listening to the show today. I want to personally invite you to come see an amazing real estate market that combines excellent cash flow, offshore diversification, and what we affectionately call lifestyle investing. Come join me from January 29th to February 1st in the beautiful country of Belize. The Real Estate Guys have been bringing investors to Belize for more than 15 years now, and with the Belize airport open again, our discovery trip is designed to show you the market like nobody else can. Sure, Belize is breathtakingly beautiful. The people are wonderful, and wait till you taste the food. But the real opportunity is the real estate investment potential. Demand for offshore real estate has skyrocketed since the coronavirus shutdown, and with retirees looking for lifestyle, the work-from-home workforce able to be productive from afar, and tourism coming back strong, now may be the perfect time to consider Belize as a place to diversify risk in your investment portfolio. There's all types of opportunity in Belize when it comes to real estate investing, including both long and short-term rentals, commercial and retail triple net properties, business opportunities, land acquisition, development, agriculture, and more. And as the only country in Latin America with English as its official language, it's easy to understand the law. Property rights are strong, and contracts are in English. And in Ambergris Caye, a unique situation exists where demand for rentals continues to outstrip supply, creating a compelling environment for investors. So come see for yourself. Join me at the end of January in Ambergris Caye, Belize, as we study the market, learn about the sustainable drivers, and tour lots of beautiful real estate. And like all of our field trips, there are no properties for sale during the weekend. Rather, you'll meet lots of local providers that will help educate you about the market so you can follow up with them after the trip. But that ball's in your court. You'll receive their contact details, but they won't receive yours unless you give it to them. You've heard about Belize and the Real Estate Guys for all these years. Now come see what all the excitement is about. Plus, we'll have lots of time over meals and activities to talk about all things real estate. To get the details, go to the website at realestateguysradio.com and click on Events, where you'll find the Belize Discovery Trip. Once you register, you'll get information about our group hotel rates as well as travel details. So join me in Belize, January 29th to February 1st. It's a beautiful country with lots of amazing possibilities, and the only thing missing is you. Go to realestateguysradio.com under Events. I look forward to seeing you in beautiful Belize.
Hey, this is Peter Schiff, and when you're not listening to me at schiffradio.com, make sure and listen to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program, heard every weekend on this great radio station, all the time at realestateguysradio.com, now in our 25th year of broadcast. And today we have a couple of great guests for you. You're going to enjoy this, I know. This first gentleman, I've been following for nearly 2 decades, and he specializes in helping builders and developers understand what's happening in the market, where things are going. From John Burns Consulting, let's say hi to John Burns. Hey, John.
Robert, it's good to see you again.
Yes, good to have you back on the program and a chance to pick your big brain. And you've been doing this a long time. It's been great to watch your company grow. And speaking of which, let's say hello to Devyn. Devyn Bachman is with us today. Welcome, Devyn.
Thanks for having me, Robert.
Well, we're excited about having you guys on the show, and always are watching what you're putting out. And a few weeks ago, you kind of sounded the highlight of build to rent or build for rent, I think you call it. But the idea that today there's markets where it makes sense to build a product not for an end user, a home owner, but really for a tenant. And so investors are interested in that for a variety of reasons. Why don't you guys tell us why you're keeping your eye on the build for rent market?
Well, reason number one is it's the fastest growing part of our business. So I looked at this recently. We've had more than 150 consulting assignments on build for rent just since the beginning of last year. And what happened was we were very early on with the whole single family rental growth as an institutional investment. And those guys have used new technology and proven that you can own hundreds or tens of thousands of homes all over the metro area and make money doing so, which pretty much every apartment person I ever spoke to didn't believe was possible. And now people are saying, well, what about if we put them all next to each other and they're all brand new and they all have the same appliances and I can manage it together just like an apartment complex? Wait a minute, 15 million people live in apartment complexes and 16 million people live in single family rental homes and condos, and nobody's ever built a subdivision for them. What are we missing? So I think that's a big part of it. The other part of it is with stock market so expensive, bond returns so low, there's so much pension capital out there that's looking for yield with some safety behind it. The money coming in is just insane.
Well, it's a great point. You know, a lot of investors, when they start, they kind of gravitate to single family homes because it's what they know. They probably grew up in a single family home. It makes sense to rent one out and build up a portfolio. But when you start just comparing the types of real estate you can invest in, and people think, well, as I get bigger, I'm going to go to apartments. There's a lot of reasons single family makes sense. And I think your clients, John, are builders who are looking to you to say, hey, what's the right product? What's the mix? I know you guys pay a lot of attention to what's happening in the various demographic groups, as well as things like, modern floor plans and building materials and all that kind of stuff. Single family, though, COVID and everything seems to be doing pretty well.
Yeah, it's amazing to me. I mean, even though everybody's collecting their rent, at least our clients are, in the greatest recession, at least for a few months in my lifetime. And even the apartment guys are doing okay. So this pandemic, if you will, has really hit people who had no prayer at home ownership in the first place, the minimum wage workers, or people who probably couldn't afford to rent a single family home, except maybe in the worst neighborhoods.
Yeah, too. And then I think if you bring the pandemic into it, that's an amplification of this trend. We saw people moving to the suburbs already, and great, now I can move into the suburbs and I can rent a home instead of owning it. And now I have work from home permissions and I want to test out Southern Cal, or I want to test out Nevada. And so I'm getting the chance to move there and rent a home before I decide to move into homeownership. So COVID has absolutely amplified that trend.
Yeah, that's a super good point, that not everybody rents because they have to. Today, there's a lot of reason that people look at their lives and they're saying, I don't need to own a home. I don't need to be tied to a mortgage or to a market forever. And so the idea that renters are just, beginners isn't necessarily the way it is.
Well, not in this world. The two biggest landlords, Invitation Homes and American Homes for Rent, between them rent 130,000 homes. Their average tenant makes more than $100,000 a year. So that is clearly somebody who could become a homeowner, but for whatever reason, it's usually life stage. I'm trying out a new market, exactly what Devyn just said. I don't want to be a homeowner right now is the target market.
Right. And if you bring that back to build for rent, why not live in a community full of other renters, right? So there's been that long time stigma of being the renter down the street and all of that. Well, now I don't have to have that for build for rent because all of us are renters and we're all in the same boat and we can enjoy that sense of community together.
Well, and there's definitely, I think, an attraction to a tenant to find something that is newer and nicer and built with them in mind.
Right. And that's not for everybody, but just like there's people who pay a premium for a new apartment, they'll pay a premium to rent a new house. And I know your audience tend to own resale homes because that's what people have been doing forever, but they appreciate the headache of calling the landlord when something's wrong. And I mean, imagine all of a sudden, well, now I've got a professional company with a 24/7 help desk. If I'm in a subdivision, I may have a maintenance guy there every day from 9 to 5, just like apartment complexes do. You'll pay a premium for that, but it's a higher quality lifestyle.
Yeah, it really is just like a larger apartment complex, just single family homes. Now, I know in your work, whether it's detached or not, right, it's still a single family unit. But are there any themes that you're seeing there? Is it townhouse style? Are these patio homes or single family homes? What are you seeing?
Well, it's very interesting. So we found 265 communities that have already been built or are under construction like this. And we color coded them by density, townhomes, something called horizontal apartments, which is just single story living, regular homes. And it was very geographically different. In Texas, what is working is detached homes. In Phoenix, it's primarily horizontal apartments, or if you've ever been to a casita, one of the resorts there, it feels a lot like that. In the Midwest, it's a lot of paired townhomes with driveways. And every location is different too, and the renter profile is different. But for whatever reason, that's the way the country color codes right now on density.
And how are builders responding to this? I mean, a lot of the home builders are looking to build a house that makes sense for someone to buy. In this case, it's an investment group that's buying it, not an individual homeowner. I imagine that's going to affect the decisions they make in terms of amenities and quality of the finishes and those kinds of things.
Yeah, absolutely. So you're right. A rental home is different than a home that you are going to live in forever. Your products need to be very durable. They need to withstand the test of time. Also, renters, maybe they don't want a fireplace, but an owner would really prefer to have that. So there's certain specifications that the builders have had to modify in order to sell their homes to the rental companies. And they're doing that, right? Some of them are building homes and then selling homes off. And then some of them have started their own platforms themselves, and they're getting into the build for rent space, and they're taking part of their land and they're developing it and putting it into communities. So there really is two different spheres in which the builders are working in.
Yeah, and I would also think that financing would have something to do with that. If I'm coming in and building 200 homes, well, then that's a different path than if I'm an individual buying, 3 or 4 of these. And, typically you worry about whether or not a community is warranted in terms of takeout financing and so forth. Do you see that as an issue at all? Or are these just neighborhoods that are being built by bigger investor groups?
Well, the banking industry has figured it out pretty quickly. I mean, there's the traditional construction builder that'll make you a construction loan, and then I'll turn it over to the perm financing guy at the end. It does make a difference of whether or not it's zoned for multifamily or single family. The one thing I'll mention is not only fireplaces, but this tenant generally wants a yard, but a small yard is fine. So you don't find a lot of these with large yards. You just don't get the extra rent. You're better off putting an extra house or two on the acre. The home builders, actually, Devyn runs our surveys, and we surveyed about 20% of the home builders every month. And 35% of them told us a few months ago that they were selling brand new homes to landlords. Sometimes it would be individuals, just like many who listen to you, just buying 1 or 2. In fact, it's been a surprising number of individuals that are buying 1 or 2 homes in a subdivision. Other times you find like Taylor Morrison, who's building a complete subdivision for Christopher Todd. LGI, who's doing anywhere from 7 to 10% of all their home sales are to landlords. They're viewing, well, right now, it's not really as important because the home builders can sell anything they can build. The market is so hot. We're recording this in December 2020. But thinking ahead to when times get slow, it's nice to have another pool of buyers out there who you can sell homes to if mortgage rates spike or something along those lines. And then finally, and I think your listeners will appreciate this, some of the construction lenders really like it because if you're a private home builder, but you've already got 10 of your 60 homes pre-sold to a landlord, that makes the lender a lot more comfortable making you a construction loan. And then finally, your trades love it because if you're doing a big subdivision, there's going to be no sudden stop if the market slows. You're basically telling them, I can keep your entire crew busy for a year, and you can get your costs down that way too.
Well, that makes a ton of sense. One of the issues that developers always face, as you know, is just the cost of materials and labor and how far out they have to look for that. And if spec builder's different, right? I'm going to build something and hope it sells. In this case, you come out of the gate with it sold. That's better for the lender, but better for the developer too. And I think a lot of times, folks who want to keep their teams working and so forth, they'll take a little lesser and make it up in the volume, if you will, and it's just more of a sure thing that way.
Well, you save some cost too. You don't have to pay commissions. As Devyn said, sometimes the cost can be a little bit lower because you can leave certain amenities out that homeowners want that renters aren't paying extra for, so they'll take them out. Although I will say sometimes the construction cost can be a little bit higher because, as Devyn said, if you're going to own this for a long time, you need something durable because you don't want to be replacing it every time there's tenant turnover. So sometimes you're putting in actually higher spec level than the builders do for homes they're selling.
Yeah, that's an excellent point as well, because it's always demand driven, right? Where's the audience? And, I think big picture is, and maybe you can confirm if you guys see this, but we've heard from a lot of folks that, nationwide, we are facing a shortage of single family homes over the next decade. May not seem like it in every market, but we got more and more population and homes are falling off in terms of their useful life. And of course, that's what you guys focus on, is helping builders understand where the puck is going in that. Do you see that? Do you see that we're going to need more and more demand for single family residences?
Well, first of all, I think people quote millions of undersupply, and we can't even get to that number. So I don't think that's true.
Okay.
But you drill down into it, and what people are saying is, gee, if I had a lot more homes that were really cheap, I could sell them all day. Well, duh. So I don't want to say that the industry is so easy that if we just supply a bunch more, we'll sell them. That's not the case. What is shifting right now, though, is that the land was in an outlying area, but all the job growth has been in the urban core. And so this cycle up until COVID was really, it didn't sprawl out the way construction normally does because the jobs were so far away from the exurbs. Now, as Devyn was alluding to, with people now proving to their boss that they can work from home effectively and getting a permission slip to think when we get the vaccine and everything to work from home at least a couple of days a week, that is giving a lot of people the confidence that they can go to an outlying area. But what has really surprised me is some of that is to go to an outlying area to rent, not buy, because I'm really just looking to live in a house like this in a good school district. And if you're there's a percentage of people that just say, if you're telling me I can do that and not have to commit to a 30-year mortgage, I'm in.
I also think, too, you have to throw geography in there, John. So there's certain geographies where supply is more constrained. But when you look at it as a total, I tend to agree with John. But there's certain hot markets that we may say today are supply constrained. But you really have to drill into the individual geography to get that a direct answer.
Certainly. And in fact, recently I remember seeing a map that you guys had put out in one of your publications that had showed the areas of rent growth kind of color coded. And you could see, oh my gosh, these are markets where we see rent increasing and other markets where they're not. How much does that play into, a person's decision to either build this kind of a product or I guess ultimately the tenant's decision to rent there?
I think what's driving rent growth is generally how fast the economy is growing right now. Also, some of the big institutions have been raising rents pretty dramatically. Actually, during the pandemic, they're not raising it on renewals because they're being kind to their existing tenants. But if something comes vacant, they've been raising rent. I think is it American Homes for Rent that raised them like 12% on vacant units. It was a huge raise during a pandemic, which proves to me that they were going after getting occupancy as they've been growing and not after pushing rent. And now we're heading into a period where if they can push rent, they will.
Our guests today are John Burns and Devyn Bachman from John Burns Consulting. We're talking about building property for rent and the shift that kind of represents. We'll have more when we come back, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is a logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South home buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Don't be like Charlie, who scans the internet for IRA information, often getting bad information from copycats who have no idea what they're doing. You deserve to work with a reputable firm that specializes in one thing, the EQRP. Lucky for you, Congress just made it possible for you to get up to $200,000 out of your current 401k or TSP, so you can invest that money in real estate or even your own business. Even if you're still working, it's possible to get access to all this money tax-free. Whether you're a full-time investor, a doctor, or a government employee, even if you have employees, the EQRP is your secret weapon. You'll never see this strategy in Money Magazine, only here with the Real Estate Guys. Every major accounting firm in America is quietly sharing this strategy with their wealthy clients, helping them get their funds freed from 401k jail. Hi, I'm Damian Lupo, and we have your solution. With the CARES Act expiring soon, this strategy will be gone forever. The EQRP company is ready to help you unleash your retirement funds now. Want to learn more about this strategy? Send an email to eqrp@realestateguysradio.com for my special EQRP report today.
Hey, it's Ken McElroy. I listen to the Real Estate Guys, and so should you.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you lack clarity in your life, if you want to have more, be more, and do more in the new year, then come out to Create Your Future, the 2021 Goals Retreat. It happens live January 8th, 9th, and 10th. You can get all the details on our website at realestateguysradio.com. We're talking today about exploring build-to-rent single-family homes. Before we get back to our interview with John Burns and Devyn Bachman, let's play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. As soon as you hear the question and want to take a guess, fire off your best guess to trivia at realestateguysradio.com. Trivia at realestateguysradio.com. You want to include your name, the answer to the question, and your physical mailing address, because the first person that gets it right gets an awesome book called Resilience, Turning Your Setback into a Comeback. That can be yours if you know today's real estate trivia question. Last week on the show, we talked about getting started in real estate investing, or restarted as the case may be. And we asked this: if you were at the southernmost point in the continental U.S., where would you be and what would you see? Well, the answer is you'd be in Key West, Florida, looking at a big red and black concrete marker that says 90 miles to Cuba. Very often a line to get your picture taken in front of it because it is the southernmost point in the lower 48, as we say. And I know because I was just there. Here's our real estate trivia question for this week. One of the things we pay attention to, and I know John and Devyn do this, is net in-migration. Are more people moving into a market? Are more people moving out of a market? Here's our trivia question. Which state saw the most residents leaving in 2019? 2020 is not over and we don't have the information yet. But for last year, which state had the most people exodus? If you know, or just want to guess, give us your best guess. It's a 1 in 50 chance. Send your answer to trivia at realestateguysradio.com. Trivia at realestateguysradio.com. Give us your name, the answer to the question, and your mailing address. The first person that gets it right is going to get an awesome book called Resilience, Turning Your Setback into a Comeback. That's today's real estate trivia question. We're talking about the concept of building property for rent. And our guest today, John Burns from John Burns Consulting, and Devyn Bachman. And Devyn, you really focus on the markets and understanding, different geographies and so forth. So tell us what you're seeing in terms of, rent growth. And people are surprised that certain markets are strong, especially given the pandemic. But you're kind of seeing that on the street level.
Absolutely. So not only are we seeing strong rent growth in many of the markets, but extremely high occupancy rates. I didn't think they could get higher. And then we produce a quarterly survey of single family rental landlords. This includes the traditional acquisition of resale homes, as well as the build for rent model in there. And the occupancy numbers for the regions vary from 96 to 98% in these regions, which are just very, very high occupancy rates. On top of that, strong rent growth. And some of the strongest markets in the country today would be Phoenix, Arizona.
Yep.
That economy is booming. The job growth is happening. We're seeing a massive in-migration from the Californians who say, wow, look what I can get in this market for this much money. So that market is very, very strong in the Southwest. Then if you move us down into Texas, Austin takes the cake. All of the Texas markets are doing well, but Austin has a bit of that undersupply issue. And so we're really seeing massive momentum there. Also, just unbelievably huge job announcements, the Tesla announcement, et cetera, even during the pandemic, saying I'm committing to tens of thousands of jobs coming to the Austin market, which will propel the growth in that market. Then we move down to Florida. The strongest market in Florida today would be Tampa. They have a lot of back of office support related jobs, and now working from home and all these connected challenges, well, that's only expanded our support systems nationally. So that economy continues to grow. And in fact, looking at the data there, it barely hit a bump in the road as we came through the pandemic, really slowing down for only a matter of weeks before picking up again. So if I had to pick my top three, those would probably be them. John, is there any others that you wanted to add to that list?
I'll throw a curveball nobody talks about. So the rising star right now is Boise. It's crazy. So one of the ways we monitor migration, since the census data is not very good, is we price out renting a 20-foot truck from one city and taking the same truck back. If migration is the same, it should be the same price, right? From 33 cities, it's $980, I think it is, more to take it to Boise than to bring it back. And they're coming out of Portland, Seattle, Northern California. And, you come from those markets, Boise is so darn cheap. I know your audience is looking for new markets. That seems to be the hot one right now.
Yeah, and to that point, John, these secondary kind of sleeper markets through this last cycle, like Coachella Valley, Lake Tahoe, markets you wouldn't traditionally have thought of as these growth markets. Again, come back to that work from home permission. Would I rather live in the congested LA market, or would I rather be in Coachella Valley with a big pool and a beautiful backyard?
Yep. In fact, we always are looking for the silver lining in whatever challenges come around. And COVID's been a serious challenge for a lot of folks. We've seen tenants lose their jobs and landlords face the repercussions of that. But at the same time, the point you're making is a great one. All of a sudden, there's a lot of the workforce that realizes they don't have to be in the same building with the same people every day. And if they can get their mind around doing their work from home and the discipline that takes, then all of a sudden the world does open up. So there's been this talk about this kind of exit from the big cities anyway. How much do you think that is just a temporary thing based on the fact that nobody wants to be near other people when there's a pandemic versus this is a lifestyle change?
Well, as you said, it was underway anyway. If you look at the demographics, all those 20-somethings that were crowding into urban areas are now 30-somethings that are having kids. So that was already underway. And it wasn't like urban was dying; it just was growing less. I think urban's going to come back, and it'll come back strong, but it's going to take a while because so many of these retail, like New York and San Francisco, I'm not sure the restaurants are going to survive. So, unless there could be some sort of rescue package to get them all back and going again. But until there's fun stuff to do, when's the next time we're going to be able to go to a Broadway show? That'll probably come back last. And what was going on before is going to repeat. Is the younger people were moving to the suburbs, but actually my generation, the empty nesters, were moving into the cities. And those numbers are still growing, and they're affluent, a lot of them, and can afford it. So I think that the cities will come back. This is not the death knell. It'll just take a little while.
Well, that's part of the benefit of having long perspective, right? You see the trends that happen and the places that are resilient. And I think for a lot of folks, you've got this idea that if I'm an investor and I say, well, build for rent, I get my mind around that. That makes sense. It's a newer asset. It's going to live longer. It's got attraction to tenants, but probably not a lot of space in San Francisco or New York to go find land to build that kind of stuff. So necessarily, the builders and the investors would be looking for the markets that are maybe on the rise, like you talked about, Devyn, but also where there's good availability of land.
Right. And two, you're seeing some of those middle markets. So I know I mentioned Coachella Valley, but don't go all the way to Coachella. Riverside, San Bernardino, very strong performer as we see people come in from the coast. But hey, maybe I'm going to have to go into the office, like John mentioned, 1 day a week or a couple days a month. So I need to be close, but I can afford a lot more, or I can rent a lot more square footage in Riverside, San Bernardino. You take that up to Northern Cal, and we're talking about Stockton. Some of the homes, the sales, and the rental rates, the occupancy rates that we're seeing in Stockton are very, very strong because of that migration from the coastal markets inward. So it's not just to other cities outside, it's just migrating a little further away into some of those secondary markets.
The whole build to rent or build for rent product really has to be driven by the fundamentals of where the rent demand is, because you got to back into the numbers, right? A developer's not going to build something that doesn't make sense on the back end side. If I'm just selling my property to people that want to live there, well, that's different. But if it has to perform from an ROI perspective for investors, they have to be even that more particular. Is there anything else they need to be paying attention to?
Well, location. But really it's the tenant profile. So, if you're within a mile or two of a hospital, you're going to be attracting a lot of people who want to live alone that make a lot of money. If you're in a decent school district, you're going to attract people that want 4 bedrooms instead of 3. So you got to know the market a little bit. And we've been doing a lot of work on this. And even though I'm saying you can characterize those things, it's amazing. You'll find singles renting 4-bedroom homes too. It's not a perfect science.
Well, it's not. And I know it's definitely something you guys pay attention to. And primarily, your client is going to be a builder developer, right, who's looking for that insight. But you guys do a great podcast, put a lot of great information. If you're interested in what John and Devyn and their company do, you can go to realestateconsulting.com. Great ideas there. Any other closing thoughts you guys have on why build for rent makes sense or what we should be paying attention to?
Robert, and I just want to mention, if some of your listeners want to get the chance to get a sliver of our information and our data, they can email me. If they're interested in participating in that SFR survey I mentioned, let us know. They get a copy of the results and a small data package for their individual metro that they operate in. So lots of great information for just giving us a little bit of feedback.
That's awesome. I've always talked about the fact that when you do rent surveys of any kind, there's the landlord that says, well, I don't want to share my information. But most folks who collect that, if you'll say, well, we'll give you the results, right? That way everybody gets to see. And it's great, up to the minute information as well. Because as you talked about, you can guess and speculate, but it is surprising sometimes what the numbers show, isn't it?
Yeah. And, if you're only investing in one market, it is important to know what's going on around the rest of the country, because you're competing with large investors right now who are allocating capital. And if you're in a really hot market, you may be really happy about it, but you should probably know that all the money is flooding into your market and not another one. You actually might want to diversify somewhere else.
Excellent point. All right, John, Devyn, hey, this has been great. Thanks so much for sharing with us. Devyn, welcome. And John, welcome back to the program. Thank you so much.
Thanks for having us.
You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. And now is the time. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2021 Goals Retreat. January 8th to 10th in beautiful Lake Las Vegas, Nevada. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at realestateguysradio.com under events, or call 888-489-7723, extension 18. Get your life back on track, physically, spiritually, and financially. Attend the live in-person 2021 Goals Retreat on the second weekend of the new year. Click Events at realestateguysradio.com to register. This is no dress rehearsal. Live the life you were meant to. Visit realestateguysradio.com or call 888-489-7723, extension 18 today.
Hi, I'm Nomi Prinz, author of Collusion. You're listening to The Real Estate Guys.
And welcome back to the Real Estate Guys radio program. Thanks so much for tuning into the show. Hey, if you've ever thought about doing bigger deals using other people's money, well then make your plans to join us for the Secrets of Successful Syndication. It's a 2-day event that happens near the end of March, and it'll be in Dallas, Texas, live. All the details on our website at realestateguysradio.com under events. Well, that was certainly awesome to hear from John Burns and Devyn Bachman.
Yeah, you get the macro picture. They can compare market to market. They can kind of see what's going on. Robert, you were just talking about the syndication event. It made me think about the other great benefit of build to rent. When you're out there trying to find individual houses to add to your portfolio as a real estate investor, you're kind of, skipping around, looking through, trying to find little one-off deals here and there. It's really hard to buy volume unless you're somebody going to go and buy a tape of foreclosures or something from somebody that's already got a big inventory, or you're taking out an investor who's exiting a portfolio. But, when you're dealing with a build to rent builder and they're building to rent and they're building a neighborhood, there's no reason why you couldn't go in and buy 5 or 10 or 20 or 30 of those things if the numbers make sense, if only you had more capital. And of course, that's what syndication allows you to do. So build to rent is also a great asset class or niche within real estate for syndicators to get involved in because you get that economy of scale on the purchase side.
Oh, we're already seeing it. It makes a ton of sense because although it may make sense for an individual to buy a single family build to rent home, and there's certainly folks that make those available, you're right, Russ, it does make sense on the bigger scale. And most of the builders that John and Devyn deal with are those builders. They're building 120 houses or 280 houses that they're designing to be rental homes. Their exit strategy is not typically to sell to mom and pop. However, there are other builders, and we know a bunch of them, who are looking to create these kinds of opportunities for individuals. Some are in places where there are infill lots, meaning development is already built. Maybe 80% of the houses are already built and there's still some lots available. Those can make great sense. Other times it's just areas where you're not going to find acres to be able to develop, but you might find one here and one there and so forth. We've talked with some of our syndication friends about the idea of, you could buy 10 houses on the same street, but you could also syndicate 2 houses from 5 different neighborhoods and get some additional diversity that way. So it's a pretty interesting area. Another nice thing about it, we talked about the start of the show, many of the reasons build to rent makes sense, but I think there's another big reason for individual investors, and that is multiple exit strategies. Think about this. We're big fans of apartments. But if I own a 330-unit apartment building, there really is only one type of buyer. It's going to be a big institution or a syndication that's going to pay based on whatever the market is. Well, if I own individual single-family houses, I could sell them to investors because I have a tenant and it works just like a piece of an apartment building, or I could sell to the tenant. The tenant can't buy the apartment from me, but a tenant could buy the house. And many tenants in these kinds of homes, which are new and nice and tend to rent for more than average, might get to the point where they would be willing or interested in that. The other thing is, it could just be a single family owner-occupant type sale. So there's exit strategy to think about anytime you're in real estate, and I think this is one that gives you multiple exit strategies.
I think that's huge. And not just exit strategies, but being able to really do better portfolio management. You can reduce your exposure in a given market if you have a bunch of individual units. If you have one apartment building, to your point, 330 units, if I only wanted 200 units exposure in that market, then I got to sell the entire building and go look for a 200 unit building. Whereas if I had a portfolio of a bunch of houses, I could sell a few houses and keep some of the other ones. But the other thing is you can flip from equity to debt. In other words, if you're on the equity side and you're the owner, you have the landlord responsibility. Yes, you get the tax breaks. Yes, you get the appreciation, but you also have the capital risk, the equity risk, and the responsibility of being the landlord. If you decide, hey, I like the income, I like the market, but I don't want the risk of being a landlord, you can flip over and sell the property, carry back the financing, and end up with a stream of income that comes from the mortgage side. So that's harder to do when you're doing these bigger commercial deals. So again, we're not saying everybody should not do apartments and jump into single family, but clearly the marketplace is saying that single family is a hot area right now, and build to rent is a hot area. And one of the other things that John mentioned was that 35% of the people in their survey, of the builders in their survey, which is not the majority, it's only a third, but they sell directly to landlords. And so there's enough of a market. I mean, there's a lot of inventory out there available. And obviously we have a bunch of those people in our world. And the infill thing is really even more interesting, because in the infill market, you're able to go in and buy, and you're not competing with as much inventory because it's not as much space. It's a more proven marketplace. Whereas when you go way out and where you're going to find acres is usually that's because people aren't there, right? You go out to where there aren't people and you build. But if you're doing infill, the people are already there. The infrastructure is there. The absorption maybe can be a little bit better in terms of demand. So again, pros and cons on either side, but there are things to think about.
Well, I think one of the things that John and Devyn brought up is the fact that if you have a neighborhood of rental homes, you can provide services that most single-family landlords can't. If you are renting a single-family house from somebody and you have a problem with the water heater, you're going to call the property manager. They're going to put in a maintenance request. Then it's going to be a day or two till somebody comes out, and they're going to do an inspection, and they're going to bother you and so on. But many of these build-to-rent communities are set up with a full-time maintenance person. So they basically grab the tool belt and follow you back to your house when there's a problem. So that's one way to look at it. But I think as an individual, here's a really important point. Many of the folks that listen to our show are busy with their lives, and they're investing in real estate on the side. They aren't full-time real estate investors. They're not even syndicators. Maybe one day they want to, but they've got a job, they've got a family, they just want to own some real estate. Well, many people look to single-family homes because it's pretty turnkey. It's pretty simple. If you're of that mindset, add one more level of positive in that the house is brand new with a 5 or 10-year builder's warranty. I mean, talk about easy. I think if you're not yet in real estate, this could be a really great niche to consider. So anyway, lots to think about. We're big fans of build to rent, so much so that we are in the process of a big series on our YouTube channel about build to rent. We've got a great episode where we kind of highlight all the reasons, and we have a panel of experts. And then we have individual episodes where we highlight markets and properties. You can see some pictures of some of the units and so forth. If you're interested in that, all you have to do is send an email to BTR Series, like build to rent, BTR Series at realestateguysradio.com, and we'll direct you where you can go. And also love the fact that Devyn is willing to talk to some of our listeners that are landlords. Probably not a person that has just a single family home, but if you've got some single family home inventory and you'd like to be part of their survey process, then they'll share some of their intelligence with you. All you have to do is send an email to sfrsurvey at realestateguysradio.com. That's SFR, like single family residence, SFR survey at realestateguysradio.com, and we'll put you in touch with Devyn. Big thanks to John and Devyn for being on the program today. Well, I just checked, and we're at about 145 people signed up for next year's Investor Summit, which means that it's well on its way, more than half full, but there's still room for you. If you'd like to join the Real Estate Guys, Ken McElroy, Tommy Hopkins, Peter Schiff, and a whole bunch of amazing folks, then get on over to the website at realestateguysradio.com and click the button that says Summit.
Yeah, I mean, this is the time when you're going to want to spend time with big brains. The world has changed substantially. It continues to change. Maybe some of the changes are temporary, but we could have many that are making up the new normal. In any case, getting away once a year and spending time with a bunch of people who are serious enough to get away and spend the kind of money and time it takes to do this and talk about this at a deep level for 9 days in a row. And we're together morning, noon, and night. We've taken down the whole resort and it's just us. It's just us. Every restaurant, every place we go, it's just going to be us and our group, and we're all going to be talking real estate, investing, economics with some of the brightest brains in the business. So if that sounds fun to you, make sure you get over to realestateguysradio.com, click on Summit, and get yourself registered. You're going to love it.
It's the most wonderful time of the year as we wind down 2020. Most of us are happy to see it go. We've got some more great shows for you this month, but be sure that you're also focusing on what's truly important in life. Until next week, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.